There's Cameron. Hi, guys. Welcome, Josh, Lamy, Lourdes. Great to see you. By the way, we need to catch up about that company you messaged me about today. Andy, hi. Carrie, great to see you. Carrie, I don't believe we've been introduced. It's nice to meet you. So we are going to let a couple other people join the audience. Hi, Andy. Hi, Jade. And we will get started with introductions. Emeka, love to see you here. Hi, Trisha. Give me 2 more minutes. Shehan, where are you based?
I am based in Houston, Texas.
What about you, Taylor?
I am in Uvita, Costa Rica.
Amazing. I bet the weather is amazing down there.
Yeah, we're the other 32 degrees down here.
Well, I'm at 17, so I beat you. Cameron, where are you based?
Usually out of Southern California.
Oh, so jealous. So jealous. Well, let's get started here while other people pile into the room. Mariah, welcome. B, love to see you here. So let's do some introductions. Shehan, I'd love to learn more about you and what you do.
Yeah, sure. Great to be here, first of all. My name is Shehan Chandrasekera. I'm a CPA and head of tax strategy at CoinTracker. CoinTracker is a software tool that allows you to connect your wallets and exchanges and figure out your crypto taxes. So I have been there since the early stages, around starting from 2019. That's a little bit about me.
Awesome. Love it. Love it. Thank you for sharing that. And Taylor, how about you go next and tell us your 30-second elevator pitch and background and bring you up to speed.
Sure, sounds good. Yeah, my name is Taylor Zork. I'm a CPA. I've been serving the crypto industry since 2018, early 2018. Just recognized a big gap in accounting and tax help in the industry. And after working with as the CFO of a couple different startups, I created a community called CryptoCFOs where we educate accounting and tax pros on how to either enter the space, or those who are already operating, we give them really like an inch wide and a mile deep content on all things crypto. So that includes, we have an accelerated course that's 3 hours. It gives you 3 hours of CPE, where we do a life cycle of a DeFi tax return from start to finish. Everything from lending, borrowing, NFTs, LP, and then we reconcile everything manually at the end, just to give people a really good sense of how to read data on chain and really become an expert at crypto tax reconciliation. So we have 60 hours of video content in the community for educating folks in the industry, and we are passionate about shaping policy.
Love that. Love that. And Cameron, you are not a newbie to our shows here. Just bring folks up to speed a little bit about what your background is and how you got here as well for people that might be new to you.
Yeah, for sure, Trevor. Thanks. My name is Cameron Browne, CPA partner at Darwin Advisors. Been in the crypto space, investor since 15, doing tax work since 2017. So know my way around quite a few spreadsheets before, CoinTracker and other cool products came around in full force. Essentially what we do at Darwin Advisors is focus on the compliance side of things. So portfolio reconciliations, generate 8949s, and then doing quite a bit of work on the prep and file and advisory standpoint. So we work with, founders, degens, DAO contributors, Web3 participants, all the way up into validators themselves, quite a few projects, startups. It's been a pretty fun ride. And outside of the tax and prep stuff, we do, some migrations, understanding kind of onshore, offshore work, the omnipresent, I guess, omni-inclusive, what is a DAO? And as of recent, sifting through 8300, which has been kind of fun with Shehan as well on Crypto Twitter.
Indeed. We're going to be getting to that and much more. But in terms of the overall agenda, and thank you all for those backgrounds and bringing us up to speed here, folks in the audience. Wanted just to do an overview of the kind of current U.S. crypto tax landscape, and in terms of, let's cover some of the major things that happened last year and what a year 2023 was. And we're going to also try to help people understand or distinguish the difference between what's considered a quote unquote taxable versus a non-taxable transaction. And then maybe even talk about any kind of standard tax forms that individuals and organizations would need. in terms of tracking things like capital gain. And then last but not least, maybe you can shed some light on helping us avoid ever being audited, hopefully from our favorite three-letter agency, the IRS. So just and you can all just chime in, just talk a little bit about just the current landscape in this space when it comes to taxation and some of the major milestones that happened last year.
So I can start if that's
Yeah.
all right. Last year we got, as far as tax specific guidance, we got some clarity on staking income, which we had already known that it was ordinary income, but there's some confusion around when that's received. There's still some argument over that, and there are people who provide opinion letters on things like this where you can take different stances. But we also saw the IRS broker regulations get proposed, which if they go through as currently listed out, it would effectively shut out the U.S. from participation in DeFi because the reporting requirements and the just the scrutiny that even wallet interfaces like MetaMask would come under. MetaMask would effectively, be treated similarly to a money service business where they would have to KYC everyone. And I think the effective kind of resolution for the players in the space, if these broker regs were to pass as written, would effectively just like geo-block U.S. participants out of DeFi. I really think that there should be some adjustment to these, and for common sense regulation that allows people to report and be compliant, but also have it not be so burdensome so that it's not possible for U.S. persons to participate. So,
Wow.
Those are some initial thoughts, but I'll let the other guys jump in, talk more about other things that have happened.
Yeah, I mean, I think a big one that came out last year as well was the IRS kind of clarified what we already knew, what that staking is deemed to be taxable through the eyes of the IRS. There's been quite a bit of discussion on that, at what level, what constitutes it, and whatnot. But it'd be a pretty big update. And then, yeah.
Lastly, Taylor, I would say, was there anything that stood out to you specifically?
With what happened last year, I mean, I think we saw, regulators get more serious about addressing things. I mean, we saw the FASB it's not tax related, but with relationship to fair value accounting with their update to their standards. And they requested feedback from the community. Our community, CryptoCFOs, created a FASB response coalition to address all the questions they had and submit our proposed solutions or changes to what they had suggested. So we were really proud about that. And I think fair value accounting makes sense for crypto. So that was cool. But, IRS related, we talked about those things. I think that, for me, what stood out is just that you can start to see the U.S. taking this more seriously from actually like putting regulations on the books. And, we saw we'll talk a little bit more about the 8300 rollout later, but, we were able to get some info a couple of days ago from IRS revenue officers that this was going to be something that was going to get pushed back to 2025, just because they really haven't put forth regulations for how you could comply with the new standards for 8300. So they're actually creating a new form in entirety called the 8300 DA. But we'll get into that a little bit more. But some interesting stuff happened. Lots of interesting stuff happened in 2023, and I'm looking forward to the new year.
Yeah. I mean, it sounds like there's just so much going on in general in our industry. And then when it comes to taxation, it appears to maybe some folks on the inside like me that it's a bit of a moving target. And before you can even start to figure something out, then something else is kind of evolving or it's changing consistently. I mean, do you all feel that way being professionals in the space, or is this kind of just something that like is innately in the DNA of everyone that wants to kind of go down this career path in the space?
I can chime in on that. I mean, I would say, it's definitely omnipresent on both sides of it. I would say for people interacting, whether they're an investor, They're getting paid in tokens. They're obviously a founder or doing stuff. There's a lot of ambiguity with regards to where these kind of tax events may hit. A lot of what we've seen to date has been guidance. It's been FAQs. It's been revenue rulings, which essentially signals the taxpayer what they should do if they want to sleep at night for all intents and purposes. Which a lot of clients, they don't want to worry about it. They don't want to audit. In the case it does, they can say, look, we complied with guidance. This is what was outlaid, and we can do as such. However, there's a lot of stuff where the guidance doesn't really fit with either the technology or there's an understanding. Take for the case like validators. At what point do we recognize the reward? Is it each block? Is it each epic? Is it when I actually collect commission on the MEV or on the actual, on the actual execution or block rewards? So kind of that like specificity hasn't been there. Similarly speaking, too, is we know that asset to asset exchanges are taxable, but how does an LP work? It depends on the protocol. It depends on the nature of the LP. We've got Uniswap v2, v3, soon to be v4, and having clarity on these transactions is 3 to 4 years beyond the actual technology. So it's been certainly a challenge on our side. And then you have the flip side of some clients going, well, it's all on chain, it's on a wallet. The IRS isn't know anyways. Well, you actually signed your return on penalties of perjury, and you probably should make a pretty good effort on that too. So it's trying to balance the client demands of like, screw the man, but also knowing that, sometimes I have to speak the man's language.
And it's funny that you mentioned that. I believe that maybe the ethos of Bitcoin and some people in our industry, right, have this very kind of libertarian or fully decentralized kind of like we can handle this on our own type of attitude. I think that there's still a portion of our community that kind of holds near and dear to that kind of thinking. Do you feel that people are starting to kind of come around and be more proactive in reaching out to people like you? Or do you feel is that there's still a bit of this kind of wild, wild west mentality where we'll just kind of, build a plane as we go along and figure it out and deal with it when we need to?
Right. I would definitely say there's less mavericks out there with regards to like, I haven't filed for 5 years, screw it. I want to come forth. We're seeing more and more people actually, kind of take ownership in the reporting, although it may, if they've been self-filing or just not had the expertise to do so. Sure, they may have slipped up in past years, but the one-offs, like I experienced 3-4 years ago of having no reporting, no guidance, nothing done. That's kind of starting to wane. I think people are acknowledging the fact this is here. They have been making profits, which also they I think in 21 there was a lot more cavalier attitude with it of like I made it, it's not theirs anyway. But then the bear hit, losses hit, and they're like, well, maybe I do want to report my losses. So that's going to change the narrative too within the client perspective. Yeah. And I would say on our side, in dealing with other practitioners, I think there's still a lot of ideating to be had. Working with crypto tax attorneys, Fenwick's out there, Olson. There's a lot of thought leadership as well with Friedman Frank, and just like trying to understand and apply the current Internal Revenue Code to these transactions. And we're all interpreting at the end of the day because no one exactly tells you this is what we recognize this event definitively. There's guidance, but not definitively yes or no. Which is frustrating as a practitioner. I wish I had a rule.
I was just gonna say, I'm like, that must be incredibly frustrating, not right?
I mean, it's job security, so I can't complain on that perspective.
True,
but also it also makes it harder because you're like balancing sometimes the client's risk assessment, their tolerances, where they feel, how much they want to sleep at night. Also the chaotic, the technology behind it. So, I mean, I do wish there was more certainty with it. It'd allow us to plan, get ahead, definitively say this is what it is, in certain regards. But at the same time, it's kind of fun to motor around in certain avenues. So I don't want to lose too much of it, but I'd like to have some working great elements as well.
Yeah, interesting.
I think.
Anyone else want to comment on that?
Yeah, I think that people are wising up to the fact that like, even if the IRS themselves internally don't have the tools to look into this stuff, I think people are realizing that there are tools like forensic accounting tools on chain, like Chainalysis, that allow for people to dig into, individuals. And the vast majority of people have KYC'd on chain at some point. And so that leaves I don't want to say a paper trail, but it leaves a trail that can be dissected by these on-chain analytics firms that, the IRS doesn't need to know how to do this. They can hire out to companies like Chainalysis to look into people that they deem are likely to have underreported or things like that. So if you have underreported willingly, and you knowingly are doing tax fraud, the IRS can extend that statute of limitations and come after you for a longer period of time. So the people now who, as Cameron was mentioning, like the mavericks of years past, I think they're wising up to the fact that blockchains are public. They're inherently accounting ledgers. That's what they are at their core. So the fact that it's very transparent once you can analyze the data at a higher level. And so there's lots of firms that are specializing in this. So I think that you're going to see more reporting, and you're going to see more pain from the IRS as well, sending out all these CP notices to people who had activity on Coinbase and they maybe didn't check the box, or they didn't report all of their gains because either they thought, hey, I didn't cash out to fiat, so it's not a taxable event, which is false, or they they have some sort of idea that it's too complicated for the IRS to handle, which is not the case either. So
So I guess it really can't be, you can't really have ignorance as an argument. I guess it comes down to it. I think that whether you're retail or institutional, it's responsibility for you to also be looking into these things and having conversation with tax professionals. And you just mentioned something like transactions and things of that nature, right? So if you don't cash it out to fiat, people think that it may not be a taxable transaction. Are there any, quickly, and we'll move on to the next topic here, but what are just some common type of transactions that a majority of the public might have misconceptions about? Or like, if I don't cash it out to fiat, then it's not a taxable transaction. Are there any other kind of things that are just blaringly just like, hey, the general public, we should know about these things and just be a little bit more cautious moving forward?
Credit to a tweet that Shehan put out. I think like in 2021, only like 700 some odd thousand Americans checked the box that they held crypto. So I'd probably start there first, as far as like at least disclosing. Because going back to it, it's like you're signing your return or penalties of perjury, and most people are like, well, it's on a wallet or it's out there. I got paid from some DAO, some project, but you're also saying no when actually it's a yes. So like, I think that's an easy place to start. And everything else down the rabbit hole, I think there's a lot of people, I guess, neglected, have to use tax tools as they venture into a MetaMask or etc. wallet. Looping in something like CoinTracker, contacting the CPA and trying to reconcile the activity. It's not even just the on-chain versus exchange or even back into fiat. A lot of people back in 2021 didn't account for their on-chain activities as well. So that's something that could be certainly a little bit more robust reporting there all across the board.
I do have some numbers that might be helpful to the
Thank
listeners.
you. This would be great. Yeah.
So, any given year, the IRS receives roughly 160 million 1040s from all the people who filed. In 2020 tax year, only 2.3 million filers had something to do with crypto out of that 160 million 1040s. In 2021 tax year, only 6.8 million filers reported crypto, again out of that 160 million 1040s that they received. So these numbers are pretty low, and if you compare these numbers to the number of users exchanges have, there's a huge delta. So hopefully, this upcoming information reporting regime is going to increase the compliance rate, but as most of you guys have pointed out, the compliance rate in this space has been extremely poor for a number of years.
And do you feel that that may just be a reason why, quote unquote, people in retail are maybe have the eyes of the IRS and other agencies paying more attention? I mean, I know that when I first saw that question on the tax form, I was just like, interesting. I didn't even know what we're considering crypto to be, but it's definitely important enough that the IRS has as the first question whether or not people are owning this as a quote unquote digital asset, right? So, do you feel as if this is just going to have more attention from the IRS, or what?
I think in 2019 that was the first year that question was introduced, but it was not on the front and center of the Form 1040. It was somewhat hidden on the Schedule 1.
Yeah.
After that, they started putting this on the Form 1040, and over the years, they actually refined this question to get more and more like precise data about people with taxable crypto transactions. So if you look at the 2023 1040 question, they're literally asking about your taxable transactions. So I don't know the numbers for the last tax season 2023. I mean, we might get to know that in the next coming year. But overall, if you analyze that data, generally speaking, in bull market cycles, people check that question. Yes, maybe they have gains. Maybe they don't know that if you have a loss, like there are benefits to reporting those losses. And I think we kind of spoke about some of the misconceptions. Like I think somebody brought up crypto to crypto transactions being taxable. That is still like a huge misconception. Like people think that I never got cash and therefore I don't need to pay any taxes, but that's not the case. Uh, and another like a minor nuances is that whenever you pay gas fees, and typically those gas fees are paid in Ethereum, that also triggers a taxable event. And a lot of people don't notice that. They're like, oh, it's just an expense. I never spent, like I never cashed out, I never profited. But those type of small transactions also lead to taxable events, which you technically have to report.
It adds up. Is there any central location where people can go for additional information about this? Like, does the IRS have a particular area, or are there any other kind of like just like a FAQ page, or maybe this is stuff that you guys can share later on? But I'm just kind of curious to some of the people that are listening. Like, is there any just centralized go-to place where we can learn more about like the basics of what's a taxable transaction, what's not a transaction? And then let's move on to the next question before we move on here about how people can best avoid being audited by our IRS.
As far as educational resources, we have in the CryptoCFOs community, we have our whole book that we wrote, Accounting for Crypto Assets, is the kind of the outline for all of the course videos we have in our platform. So we have I think over 60 videos spread over 9 courses in our course community. So if people want to learn about what's a taxable transaction, even if you're not an accountant, it's really helpful as an investor to look into that stuff. And we outline all of that in our community, as well as we have weekly discussions every Wednesday, Water Cooler Wednesday, on a number of different either current events or just diving deep into things like valuing illiquid altcoins or LP accounting or things like that. So if users want to join the community, just shoot me a DM after the call, and I can help with that as well.
Nice, thank you. Anyone else before we move on?
I think the IRS also has pretty good guidance. If you search for like IRS digital assets, they have a dedicated page. And in that page, they have linked out to all the guidance that they have issued over the years, including CCAs, publications, FAQs, and everything. So that's a good place to start. And also like on CoinTracker, we have like a Crypto Tax 101 blog post, which we kind of explain all the taxable events and everything you need to know in simple terms. So that is also a good resource for you to have if you don't want to get too technical.
Nice. And I guess that, it's personal responsibility to avoid as much as possible getting audited by the IRS. But is this something that you have seen amongst yourselves? Like, how many of the people that are your clients have gotten audited so far that you know of, or is this still something that's fairly small?
I guess anecdotally on our side, it's been small. We've seen a handful of cases year over year. And I'm speaking with the fact of we launched Darian back in 2021, the bowl, so we're probably not going to see a lot of stuff coming back out for a couple of years or so. But we've had people come to us anecdotally, we've worked on a few cases together. But I would say compared to other types of audits, not as common. I haven't seen the same. I think it's just a lack of either understanding or resources or tooling at the IRS level to enforce. But haven't seen it anecdotally.
All right.
Yeah.
Well, yeah.
We see
Go.
some CP2000 notices here and there. Like
Yeah.
if you search on like, Reddit and Twitter, like somebody is posting about, CP2000 notices, which get triggered when there's a matching problem. A couple of years ago, IRS sent out like 10,000 plus notices for people. These are not CP2000s. These are crypto specific ones like letter 6173, 6174, and 6174-A.
Hmm.
So during those years, yeah, so a lot of people came to CoinTracker to download the 8949s and kind of show it to the IRS. Hey, here's how I calculated my stuff. And yeah, so we kind of went through that, but I haven't seen like a new wave of crypto specific letters lately. But it's possible it could happen because I think last year there were like 2 or 3 exchanges that got subpoenaed, including Kraken and Circle. So those letters haven't arrived yet. So we'll see.
Oh, so people might have
Looks
to
like
prepare for those. Yeah.
Yeah, and actually, we actually started a new practice called Crypto Tax Trouble for folks that are receiving these notices. So we specialize just solely in helping folks deal with the IRS and resolving their tax issues. So if anyone knows of anyone or is having issues with getting a CP notice or something like that, we can help with that as well. We set up offers in compromise and payment plans and things like that. So, if anyone's interested in that as well, Crypto Tax Trouble is where you can find more information about that.
I salute you. I salute all of you because I know how complex this stuff is. So let's move on. In terms of just reporting challenges for crypto transactions, let's just talk about some common issues faced by taxpayers and reporting these necessary, crypto transactions. And obviously, I would say the difference between just the average retail individual and an organization or an institution, maybe some of the complexities that they deal about. And then let's talk about just some of the kind of more current things that may be addressed when it comes to crypto transactions. I mean, maybe talk a little bit about like the travel rule, what that means, the implications, and also to anything else, about like the origins of the $10,000 threshold when it comes to, transactions. I know that's not necessarily unique to cryptocurrency, but I believe that started with the Bank Secrecy Act. And, are there ever going to be conversations about like adjusting these numbers? Because $10,000 in 1970 is a little bit different than 2024. So just I would love your thoughts on that.
So it looks like compliance for this won't be enforced until the regs come out related to this. So we did just get that notice from the IRS saying that they're going on the record saying that they're not going to enforce this for crypto until they have popular regulations so that people know how to comply. Because the way that they were originally written, it was effectively, if you're a lawyer or an accountant working on the space and you work with any DAO or anyone who's anonymous at any level, and you get paid by them, it's on you to dox them, so to identify them on chain. And so now it was the way that they were originally written, it was going to basically make it impossible for those serving the space that wanted to honor people's anonymity to be able to participate in the space. And that's very common for people to want to remain anonymous on chain. So there was a lot of issues that were potentially going to be brought up with this, but it looks like the IRS is going to make a specific, a new form for this and kind of outline more clear rules for it so that we can comply properly and also have a clarity on what's required.
Makes sense. Thanks for sharing that. And anyone want to chime in on just, cross-border tax implications and compliance issues and maybe some of the advances that are going on abroad and maybe the lack of the guidance that we're having here, and then talk a little bit about maybe just some of the considerations for different types of activities, whether that be staking, yield farming, and things like that.
I guess I could take a stab at that one. Sure. I would say certain complexities. I would say go down the rabbit hole more when people are engaging more, leveraging, using decentralized finance. At the very more like base level for a lot of retail traders, I've just seen the complexity of people's portfolios. Whether one, they may be staking or just trade on a chain, but the chain's not supported. or they're going from an exchange to an exchange, and maybe it's not grabbed correctly, and they have basis issues. Those would be kind of like, or they got this airdrop or these staking rewards, they weren't categorized correctly, and it causes basis issues throughout what they're doing. So like on the more like basal, like early ventures into crypto and navigating through basically on-chain transactions, that's kind of what pops. But as things get deeper, so like say you're going to Aave and doing any lending, or engaging with SushiSwap or Uniswap doing liquidity provisioning.
Yeah.
There's a lot of times where again, let's take Aave for example, which is kind of like the de facto lending marketplace. Is you take your ETH, which is wrapped ETH, you go in there, you want to deposit into a pool. Depending upon the software, sometimes they may categorize as a swap when you're going from your ETH to your Aave wrapped ETH, AM ETH. But they're actually one-to-one parity, and where does that taxable event lie? Is it do we recognize it because that asset is different, it's got different qualities, that Aave Aave version of ETH tells you to earn interest? Or do we fall back on it's a parity, that Aave ETH is just a receipt token, and I've had the ETH the entire time deposit earning interest? So this kind of gets extrapolated depending upon the protocol, how it's coded, how it shows up in Etherscan, etc. The more complex transactions are. So again, guidance for crypto CFOs, CoinTracker's got a great guide on this as well, and just understanding where those pitfalls may be. Outside of the U.S., some jurisdictions have been a little bit easier, where it's when they liquidate back into fiat. The things are just looked at either capital gains or not. I know I think my partner is in France. I think it's only for something that's, Germany has a long-term rate. France has something in regards to, again, conversions back into fiat. So certain countries have taken different approaches, but I do know the more you're basically US and Commonwealth. So US, CRA in Canada, the UK's HMRC, the Australians ATO have similar approaches. They're all just kind of navigating with enforcement actions, understanding audits, and kind of putting out some more guidance. But we have got capital gains, ordinary income, and it's usually on the taxpayer to figure out where that falls in between.
I like that you brought up, Cameron, that the fact that we have, I consider them to be receipt tokens on Aave, and I'm not giving people tax advice officially here, but I when I've used Aave personally, I think that it's pretty clear that I'm depositing something into a smart contract that can't be moved without my consent, or it could get hacked, I guess. But these smart contracts have been battle tested over years. So when you deposit that wrapped ether into Aave's smart contracts, and then you borrow against it, if you're relying solely on the 1099 information that gets sent to the IRS by Coinbase, and I flow that USDC that I borrow against, with, against my collateral with, it's going to look like I had income, according to Coinbase, because I had, let's say $10,000 worth of USDC flow into my account. So a lot of times we rely on disclosures attached to our tax returns so that we can kind of call those things out, because, you'll have a mismatch when you don't report that as income because it's a loan, right? But you still want to call things like that out so that you can kind of be as transparent as possible with the IRS, so that if they do kind of flag your return for audit, maybe they have additional context as to what was going on. That might have been something that was not really a taxable event on chain, but maybe appears to be so, based on the reporting that has been done by centralized exchanges.
Hey, sorry guys, I had to step out for a second. That was excellent alpha, absolutely excellent alpha. Is there anything else you guys would like to add regarding taxes and crypto? I think I need to go pay some taxes. Don't tell anybody.
No, I guess I'd like to chime in that if you're working in the space, it's one of those things of being better than good. So, you've got not like a target on your back, so to speak, if you're, working at a protocol or a contributor, but, you have a little bit more heightened risk being publicly facing other parties. So ensuring that things are done well to the T is quite important. And it's something too that we've been seeing demoing out, quite a few different tax softwares is you may kick it in, it may generate the 8949, but you may see like outsized gains or losses because it's not recognizing the transfer basis or what it is. So if you're showing, $0 proceeds, $0 cost basis, that may not be right. And these are things, talking with machine learning or later on just reviewing returns, that just calls into like not a red flag, but like a yellow flag. Like, why does it have $0 of proceeds? What'd you do? So having that more like cursory review of what's being even generated is important, and taking like vested ownership in your documents, not just simply rely upon it, which because it is your tax data, you should take ownership in it. But I understand that everybody's a CPA and nerds out on this stuff like I do.
That's really interesting. Do you like also see any kind of changes with respect to AML KYC for like cold storage, and maybe even in the future, if someone was trying to do a transaction from like a cold storage wallet they've had for 10 years and they're trying to move money to Coinbase, how does that kind of make it more complex for the average retail investor? And do you have you had any conversations about like changes when it comes to AML and KYC for that?
Maybe I can add some thoughts here. This is a topic where we're having conversations with almost all the brokers in the industry.
Okay.
The problem is that I mean, in the tax rule, in the 1099B, you have two types of tax lots, right? There's covered lots and there's going to be non-covered lots. A covered lot is something that can only be calculated by the broker system internally. What's unique about the crypto space is that most of somebody's tax lots going to be non-covered because of the transfers from and to self-custody to automated wallet, and like you said, Trevor, transferring something from unhosted wallet to say Coinbase and you're selling it there. So the question is, how do we incorporate this vast magnitude of non-covered lots into information reporting? So the current kind of consensus is that these non-covered lots are maintained by aggregators, not only CoinTracker, there are a bunch of them. So the industry is kind of talking about incorporating those non-covered lots inside 1099BAs and tax centers maintained by brokers. So the taxpayer, they have a full view of their information, because otherwise the 1099DAs and tax center is going to be essentially worthless because there's going to be so many gaps.
Wow, really interesting, really interesting. Well, one of the other things too, before we get to a little bit of Q&A here for any folks, this is, I'm intrigued. I'm learning a bunch here. Thank you for sharing that. But let's talk a little bit about things that are going to be changing with respect to new crypto regulations in 2024 and how that's going to impact the taxation. I mean, I think it's the 650I rule, was that the form 830, and then there's some updated IRS guidelines that were just recently announced as well too. How is that shaking up the industry, and how is that making your jobs even more complex than it already is?
I think we'll kind of see when, with the 8300s, the 6050I, I think that, now we got more clarity from the IRS saying that they're not going to start enforcing it until they have proper regulations in place.
That's good. That's
I
good.
think, that's gonna, that put us, a lot of us at ease, because it was almost penalizing the people that were trying to comply the most, because, we were trying to scramble to create proposals for clients, where it's like we don't even know, we're just kind of like closing our eyes and throwing at a dart at a board. And so now that we kind of have an understanding that, okay, they're going to be hopefully thoughtful in creating some regulations first before rolling out this new reporting requirement, I think it's going to it put a lot of us at ease. So looks like, just from some talks that our team has had with some revenue officers, it seems like the rollout for that's not going to happen until at least January of 2025. So kind of been put on the back burner a little bit for most of us, but still, I mean, more reporting means more more work for us as well. So as Cameron was talking about with job security, there's no shortage of job security being a crypto accountant. So I think we'll continue to see that.
Yeah, that's good for the industry. I think that maybe some recent college grads can see some opportunities there and think maybe about a different career trajectory for sure. Definitely job security. You guys are going to have it, especially as these transactions kind of ramp up. I mean, we are nowhere near mass adoption. Just wait until institutions start, doing millions and billions of transactions. I'm sure that it's going to be some sleepless nights for you all for sure. Anything else in terms of just like maybe personal stories we can go around before we open it up for QA, like maybe your worst crypto tax nightmare, or maybe even something that was like a win for you, or this really made you proud of being able to do what you do?
I'll bite. I guess on the part of the nightmares, I would say, post the bull run and filing for the 2021 tax year was nightmares all around. Finding that like a lot of tools, and I'm sure Shehan can definitely empathize with me, or even empathize with me on this one, is there was all this stuff being rolled out. We didn't have strong API polls. Things weren't talking. We could find like a lot of tax tools and have good support for Solana, or they did for just like maybe for receipts, deposits, and potentially staking, but not for actually trades or DEXs or activity within it. So I'd say like horror stories that first, heavy tax year in the bull run with DeFi really taking off was just like all across the board, really from the compliance standpoint. But then you married also the fact the market started tanking in Q1 of 2022. So you have a lot of people that made like a lot of paper income and then had a lot of paper losses after the fact. Couple of that, we didn't know what the heck, a lot of people didn't know what they were doing. And so I would say that was definitely a horror story back then. But again, cutting your teeth, understand it, just served for how we approach this going forward. Like, oh, we haven't, this is the first time we've seen Hedera, or they're on this new chain here deploying in Cosmos. Great, we can roll out procedures around it. So it's been like a great teaching point. And thankfully too, the tech, I guess, is slowed down. There's only so many liquidity, protocols. There's so many DEXs that can be incorporated, and things are starting to amalgamate, at least in the data standpoint. So things aren't too extraneous. So I guess it's been greener pastures since, as a lot of tools, ourselves have caught up as well.
Interesting.
Yeah,
Thanks, Cameron.
I think that the in the bull market especially, the tech moves faster than the blockchain tech itself, and it evolves and there's new use cases, and it's hard for even the best crypto tax softwares to keep up with rolling out new chains, and I commend those that are able to accommodate fast enough. But it's like, feels like a lot of times, I mean, that's got to be a major challenge for companies like CoinTracker, is like staying on top of new networks as they roll out, and providing support. I know that they provide really, really good support for a lot of DeFi, but that's got to be a nightmare as a software provider, to constantly be adding new features and things like that. And that was a big challenge, as Cameron alluded to, back in 2021. I hate to admit it, but I was all in Excel still then, and it was a nightmare. And supporting all my family members, crypto transactions and trading as well, in Excel.
Oh, you did. You stepped up.
Wow, gangster.
I mean,
yeah.
Whoa.
Yeah.
All right. Good for you.
Yeah, it was brutal. And running a company in Excel at that time, because I just couldn't find a good. At that point in time, I didn't know of the good subledgers that were out there. So I learned the hard way, and now on the other side of it, we're using subledgers, we're using accounting. We're using tax software as well. It makes our lives and our jobs a lot easier. But yeah, the biggest challenge here is tools keeping up with the pace of innovation. So always a challenge.
Thanks so much. And Shan, do you want to jump in there, add a little note before we move on?
Yeah, I mean, as you guys pointed out, yeah, I mean, integrating with the latest blockchains and smart contract, that is always a challenge. And sometimes you integrate with these new coins and etc., and that coin does not exist anymore. For example, stuff like Luna. So yeah, I think when you're picking like a aggregator, I think their ability to integrate with these new blockchains and parse smart contract, like how fast they can do it, should be like a deciding factor for sure. Because otherwise, part of your information is going to be on an aggregator, the other part is going to be on something like Excel. Then you'll have to do this manual combination, and which sucks. So yeah.
Thank you. All right. Well, this has been very good conversation. I'm learning a bunch here. Let's open it up to some Q&A. Anyone in the audience have any questions for our tax professionals here? I know I have a few more, but I'm not going to dominate the conversation, so I'll leave it open for you all. What about you, Emily? Do you have any questions? So we'll see anyone have a question. So for me, I do have a question. So with AI coming in and everything like that, right? A lot of people are saying, AI is going to replace people's jobs one day. And I think that they're mentioning, lawyers and accountants and things of that nature that, somehow, some way at a point that maybe this technology is going to be able to take away a lot of the manual things that are done. Do all of you have that same kind of mindset, or are you kind of more optimistic about the potential of AI and maybe even helping solve some of your problems and being able to manage this massive amount of data that's coming in that you need for reporting? So that's my question.
I can jump on that. I've seen some tools. So, being part of a community, we see a lot of, we have a lot of subledgers as vendor partners in our CryptoCFOs community. And we talk to a lot of new ones that are rolling out all the time. I've probably spoken with 15 different subledgers for the crypto industry, and all of them have different kind of special sauces and different things that they specialize in. But I haven't seen a couple that have popped up that are leveraging AI. Whether it's from their communities. I mean, some of it's not really AI. Sometimes people say it's AI and it's really just like, everyone wants to say they're an AI. But, I've seen some tools that are leveraging, community-driven, calling out of different contracts to say, okay, this is a Uniswap liquidity pool, for example, so that their software then can automatically categorize that as a swap or a trade or whatever. And things like, acknowledging that this is a coin. We know that on chain, this is, a 99% likelihood that this is a Coinbase account or something like that, and leveraging things like that. So to say that, I think that crypto accounting and tax jobs are safe, just because of the complexity of it. And I think it's going to be more of dealing with the changes, but I definitely think that AI will provide streamlined processes for those of us that are working in this industry to be able to get our work done more efficiently and effectively. So I think we're definitely going to see more and more innovation on that front. I have seen tools that are leveraging AI for categorizing transactions and things like that. But wondering what the other guys have to say on this.
Yeah, thanks. Awesome. Thank you.
Yeah, I mean, I would say I'm optimistic and pessimistic at the same time. Optimistic in the fact of like kind of the minutia of running a firm. So certain like AP, admin, operations, kind of the back end, that it's the unfortunate nitty gritty. So like that stuff, be able to rely upon, ChatGPT and specific tools to kind of automate that part of my life so I can focus more on actual value add client service work has been incredible. So I think that's the one great benefit. And then, but I do see, it will eat up the value chain. We see it with bookkeeping right now for fiat or just, traditional e-commerce or things on zero and categorization. So like bit by bit, but, much to what Taylor said, certainly from the tax standpoint, crypto is on the, kind of the bleeding edge of it, but I would see, starting to eat other industries of tax, slip bit by bit into crypto, but there's some time, but definitely I know there's a target.
I like that fair approach. Yeah. And anyone else?
Yeah, I mean, I don't think we're at a point where that we can fully outsource our jobs to AI. I'm talking about accountants and tax pros. However, I strongly believe in this co-pilot approach, meaning,
I like that.
you still do your work, but the AI provides, more efficiencies. I mean, personally, I use AI in those type of things. For example, I would use ChatGPT to summarize something or write me like a good starter introductory paragraph, which I can edit. So that's going to save me time. For example, when it comes to CoinTracker, instead of like manually entering bunch of filters, for example, let's say I want to see all the staking transactions between X and Y date over a certain amount, instead of selecting those things manually, you can just type what you want on the field and it will give you that. So I think the co-pilot approach seems to be working pretty well, but in the future, who knows? So
yeah, thank you for that. And moving forward, I would say, what is a lasting kind of word lasting few words of wisdom, and we'll go around to each one of you that you can share with people in the audience. For me, I've been taking away that education, like most things in our industry, is the name of the game, right? Continuously taking it up on yourself to educate yourself about the nuances of taxation and all the changes, because at the end of the day, it's our responsibility as individuals and as business owners as well too. And I think that something else that I'm taking away from the great insight that you all have been able to provide is that we should make friends with someone that's a crypto tax accountant. Would you agree with that or not?
Yes, definitely make friends with a crypto tax accountant. I would say that if you're gonna you're either going to go down two paths. You're either going to hire a crypto tax professional, or you're going to do it yourself. And for those who are do it yourself, I would say educate yourself, ensure that you understand kind of how, as Cameron alluded to, how the software itself is pulling in data. Like, what assumptions is it making, which is a challenge, right?
Yeah.
I think the good example was with the Aave tokens, when you have like collateral, and maybe that's not a swap, and maybe that's just a receipt token, right? So how do we make sure that we're classifying that as properly? And for those of you who do decide to go with a crypto, CPA, I would make sure that they're qualified. And I wouldn't. If you find someone that is qualified, I wouldn't price shop because I think that people who are qualified in this space and who know their stuff are few and far between. There's a lot of people who are pretty good at like making it sound like they know what they're talking about, but maybe they don't really. So I would say that when you find someone that's good, don't price shop.
DYOR and hold on to the good ones, huh? Don't let them go.
Yeah, exactly.
That's awesome. Any other words of wisdom before we wrap it up here, folks?
Yeah, I mean, I'll chime in. I think good faith goes a long way. We're all trying to figure this out, CPAs, educators, participants in Web3, and we're all trying to do our best of what's at hand. So making that good faith effort, with regards to your own reporting, understanding, also, as a taxpayer interaction, like do a little bit of education, feeling more familiar, and also knowing when to tap out. I've been on the downside of like people that have self-pilot for quite a few years, and they probably shouldn't have, and did themselves a disservice because they didn't, they were either price sensitive or, didn't see the value in it. So, knowing when to tap in someone. And I'm also pretty lonely, so come say hi. But jokes aside, there's, again, to chime in with what Taylor said, there's a lot of like crypto Web3 charlatan accounts out there. It has subsided with the bear market, but we'll probably see this come up in a few months as things get going. But test them on their knowledge. What do they hold? Do they have a PFP or a profile pic? Are they participating in DAOs? Like, see how native they are, because a lot of folks go out there and say, "Yep, we do blockchain consulting and accounting or tax prep," but they may just not have that review or cursory knowledge to really take it further. So price does speak. There's a lot of good, talented professionals out there, but they are also limited, and demand is very, very high for the supply. But hopefully there's more people coming to join us.
Yeah, I mean, you get what you pay for, and that makes so much sense. There's just different, the nature of different businesses, right? I mean, a DAO versus an NFT focused organization versus, one that wants to kind of play in the traditional asset or digital asset space or the institutional side. I think that you're going to need to have someone that knows about the intricacies of all of those types of businesses, and whether you're a small fry or you're a big whale in this space when it comes to doing your own kind of investment as an individual. So great. Do we have any other questions from anyone else in the audience before we wrap it up here? I think that this has been very insightful. I have learned a lot. Anyone else here? So we'll leave it at that, folks. Before we do let you all go, because you've been incredibly insightful with your knowledge, and this is really kind of giving me a little bit to continue my own personal education as well too. I mean, it's always a little bit gets me going here to go down yet another rabbit hole. But what I would say is, what's the best way for people to get in touch with each of you? Are you currently doing anything with your respective organization that you would like to share with us? Is there anything else that you're doing personally that you want the people to know about? Because I believe that we do have this recorded, so I don't want to quote myself here, but I believe that this might be something that people can listen to in the future. So any closing words or anything that you want to share with the people here?
Yeah.
Go ahead, Shehan.
Oh, sorry.
Sorry.
Yeah,
No.
I mean, you can find me on LinkedIn or on Twitter at the Crypto CPA. If you're a tax professional dealing with crypto, we would love to talk to you personally to understand your pain points, and offer you like free plans and stuff like that, so you can kind of test the
Awesome.
product and help with your practice.
Love it. Thank you so much, Shehan. I appreciate you.
At CryptoCFOs, we're opening up an investor membership in the next couple of weeks here, so that folks who are looking to prepare their own taxes can access our 300 plus accounting and tax pros in our community, and bounce questions off them, or they can DIOR to learn about crypto taxes on their own to file things as well. So we're going to be rolling out that membership in the next couple of weeks. So keep an eye out for that. If you're an investor and you want to have just some extra peace of mind when you go to file your crypto taxes.
I love it. Thank you so much, Taylor. I appreciate you. And last but not least, Cameron.
Awesome. Yeah. You can hit me up on LinkedIn, on Twitter as 0x Crypto Tax, or our firm's website, www.darnadvisors.io. And I guess as like announcement as well, our firm will be sponsoring Eat Denver, so you can hit us up at the booth at the end of February. So come check us out. But yeah, I love having a conversation with folks. At least reach out, say hello. If we can't help you out, being a service provider in the space, we can get you linked up with, good attorneys, FAs, marketers, whatnot. I just also love a good conversation because there's a lot of cool, Web3 weirdos, and it's a fun time.
Indeed. And, we'll probably have you all in some capacity come on and speak on one of our platforms again. I think that the name of the game is continuously educating folks. So thank you so much for taking time out of your day to, help us noobs that don't know nearly as much as you do to understand the complexities of this. And if there's anything that I can do to help you all out, it's my mission to try to help crypto taxation become more quote unquote sexy, because I think that it's something that people need to be paying more attention to. And you've definitely opened my eyes up a bit here, and I really do appreciate it. So gentlemen, I will leave it at that. Thank you everyone that attended today. Please reach out and connect with these individuals that have been so kind with their time, and we'll be going from there. Do we have anything else to close out, Em?
No, I think this was a fabulous panel. Just want to thank you guys for joining. We've got this recorded, so we'll be posting some content and sending that your way. But thank you all for being here. I really appreciate it. Josh, Lami, Lourdes, Andy, Carrie, thank you for staying through for the whole thing. Trisha, Ryan, George, Kelly, Brandon, it was good to see you. B. Michael, Brian, Emeka, Dom, Danielle, Mariah, and Squeeze. Thank you guys for coming. Hope you have a fabulous Wednesday. We'll see you here next week.
Take care. Bye, y'all.